was kind of interesting for Bailey. Suddenly, it almost looked like he said, "Wow, here's my chance." After years of the bankers leaving interest rates at zero, so that pension plans couldn't fund their future liabilities, so they had to go into these esoteric and risky derivatives. So that's what they had. They sort of forced that move. And then they saw an opportunity to say, hey, it wasn't us. You proposed these tax cuts. This has nothing to do with us. When that's what really caused the unraveling in the first place. And now you can see they aren't taking the blame. She's gone after what we called 4 Scaramucci's, which is 4 times 11, right. 44 days. She's gone, and the central bankers suddenly are being commended for doing enough to stem the sell-off and the gilt. So they're not supposed to be political either, are they?
Well, no. And that's the problem, that central banks have become increasingly political. I think this was a terrible example because it was the former central banker, the head of the Bank of England, Mark Carney, who within days of the announcement of that pro-growth tax cut regulatory burden for the private sector, empower entrepreneurs, he badmouthed that in a BBC interview and said, well, that's working at cross purposes with our central bank. So he put the central bank's agenda, which had just done the switch from the easy money to now they're very committed to tightening money. They haven't really achieved price stability whatsoever. So I think they've failed. They've left the world with an extremely fragile international financial system, highly vulnerable to these kinds of market dysfunctions. And every time we have a meltdown, the central banks, who should have been predicting it, if anyone was, they're responsible for calibrating money and credit to the needs of the real economy. They end up avoiding the blame and then use that as a rationale for why they should have even more powers to influence economic outcomes.
Hey, Judy, I have a lot of problems with what we've just talked about, but let's just back it up and talk about central banks becoming political. You can say what Mark Carney was saying. He's a former Bank of England governor, not the current Bank of England governor. And I think that this was a case where the central bank actually stayed more independent, didn't do whatever government was in charge was hoping to do. It's something I would like to see Jay Powell do here, where if the government here decides to spend more money, I would like to see Jay Powell remain more independent and say, no, I'm not going to go along and do that. And I think it takes a lot of courage to not do what the government in power is doing. The current Bank of England governor was not saying anything about it politically, did bend and change position by loosening things and saying, OK, we'll go ahead and buy these gilts, even though this is not what I'm trying to do right now. I'm trying to raise rates. And yes, you can point to years of problems with what the central banks have done up to this point. But at this point, central banks are trying to tighten. It shouldn't be them who is then making it OK for governments anywhere to spend more, no matter how they're doing that, whether that be supply side, whether that just be additional spending for whatever goes out there. It's not up to the central banks to do whatever the government in charge wants them to do at this point.
Well, our central bank officials do tend to be more reticent. I can't tell you how many times we've listened to Chair Powell say to Congress, I'm not going to weigh in on that issue because that's not my job. Now, he does say that our fiscal situation in this country in the long term is unsustainable. But nobody ever then says to him, well, this is day one of the long term. So what are you actually saying? I think we have to make a distinction between overspending or borrowing from the future in order to finance current consumption. That's really big government socialist redistribution. I think that's different than offering tax cuts to promote private incentive to create more, to have higher supply of goods and services, because you're cutting taxes and regulations, and that helps entrepreneurs actually produce. My issue is that central banks should have a very narrow function. They should provide stable money and then let the private sector use that as the platform for productive economic activity. And the problem is that central banks have guided investment into financial speculation. And you can make good money doing that, but that does nothing to increase the size of the pie. That does nothing to increase genuine prosperity shared by the whole population. The money has to work for everyone, and it does nothing to really raise standards of living. So I think we need a major Copernican revolution in that we have put central banks at the center of our economic universe. And I think they have way too much influence to allocate credit. And when I talk about politicization of central banking, I think we see things like climate change, diversity creeping into their mandate. And I might note, with regard to diversity, a recent study came out that 90% of the economists who work at the Federal Reserve are registered Democrats. What we really need is intellectual diversity at the Federal Reserve.